everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot steel prices maintained a fluctuating and upward trend. The domestic spot price of hot-rolled coil rose by 30 yuan ton, and that of rebar increased by 20 yuan ton. The accelerated implementation of macro policies coupled with capital-driven speculation, together with rising sentiment for winter stocking, jointly supported the upward movement of steel prices. On the macro front, domestic policy continued to exert strength. The Central Bank Work Conference clarified that a moderately loose monetary policy with structural interest rate cuts would be implemented in 2026, fueling expectations of reserve requirement ratio, RRR, and interest rate cuts. This effectively reduced corporate financing costs and boosted market confidence. In the overseas market, escalating geopolitical conflicts combined with expectations of global liquidity easing drove continuous capital inflows into the commodity sector. The Platts iron ore index rose by 2.84% week on week, providing cost support for steel prices. External trade environment still faced pressures. After the implementation of the new steel export license management policy, some enterprises experienced a slowdown in export pace in the short term due to the need to adapt to the new procedures. However, the policy does not involve quantity restrictions, and in the long run, it will guide the transformation of export structure towards high-end. On the industrial side, supply increased slightly. The supply of 5 major steel products reached 8.1921 million tons this week, a week-on-week increase of 0.062 million tons or 0.07%. The recovery of steel mill profits drove the continuation of production resumption, but there was obvious differentiation among varieties. The output of wire rod and hot-rolled coil increased, while that of rebar, cold-rolled coil and medium and heavy plate decreased slightly. Pig iron output kept an upward trend, and the blast furnace iron-making capacity utilization rate of steel mills remained at a high level. The supply growth rate stayed mild before the Spring Festival. In terms of demand, the market showed seasonal characteristics of stable plate demand and weak construction steel demand. Construction steel demand continued to weaken seasonally. The weekly consumption of rebar stood at 1.7496 million tons, a decrease of 12.71% week on week. Frozen soil in the north and low-temperature rainy weather in the south restricted outdoor construction activities. The year-on-year decline in the operating rate of construction machinery also reflected the slow progress of infrastructure project implementation. Regarding inventory, the total inventory of 5 major steel products turned from increase to decrease. The total inventory this week was 12.4701 million tons, a week-on-week decrease of 0.0691 million tons, temporarily easing the inventory accumulation pressure. By category, the inventory of steel mills reached 3.8068 million tons, a week-on-week decrease of 0.0807 million tons, mainly driven by the increased willingness of downstream enterprises to replenish stocks. The social inventory stood at 8.6633 million tons, a week-on-week increase of 0.0116 million tons. The social inventory of rebar performed well without accumulation this week. The social inventory of cold-rolled coil stood out with a week-on-week decrease of 0.0235 million tons, and the inventory pressure continued to ease. In summary, the rise of steel prices this week mainly relied on macro policy benefits and cost support, and the fundamentals presented a pattern of slight supply increase and marginal inventory reduction. In the short term, expectations of RRR and interest rate cuts, as well as the policy of coordinated fiscal and financial efforts to expand domestic demand, will continue to boost market sentiment. The rise in raw material prices also underpinned steel prices. However, the seasonal weakening trend of downstream demand before the Spring Festival is irreversible, lacking strong support from end-user demand. Comprehensive judgment shows that steel prices will fluctuate and remain strong in the short term, but the upward space is limited, and it is difficult to form a trend-like upward movement. Therefore, it is recommended to purchase on demand and conduct winter stocking cautiously before the Spring Festival to avoid chasing the price blindly. It is advisable to replenish rebar stocks in batches when prices pull back. For hot-rolled coil, maintain procurement based on rigid demand and track the release pace of manufacturing demand. Billet, supported strongly by the raw material side, can be allocated in small quantities. Institutions hold the view that the pre-holiday macro sentiment remains robust, with expectations of molten iron production resumption and steel mills' winter stockpiling as well as inventory replenishment still in place, keeping iron ore prices fluctuating at a high level. The supply-demand dynamics of steel products stay loose, yet cost support will be in place ahead of the holiday. The pattern of strong raw materials and weak finished steel products is set to further persist. To sum up, steel prices have received relatively strong support recently, and a cautiously optimistic stance is recommended. In terms of procurement varieties, rebar and billet will show stronger performance. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.